afternoon, everybody. Welcome to this week. And well, what a week it's been. What a week. It was a shortened week, of course, because we had Victoria Day on Monday. So a 4-day trading week. Not too shabby. Not too shabby. And of course, we're back here. We did do 2 market closes last week. We had Wednesday and Fridays, which is absolutely fantastic. That was the bonus one last week. A lot of fun. I'm going to give you guys a chance to win a bonus one for this week. So a chance to win, let's say Friday once again. I did speak a tiny bit in the last market close that I wanted to do one that was a little bit different. Like normally I'm like, okay, if we get so many supers, we'll do it. We're not going to do it this way. I wanted to do one this week where we could give the people who are watching this on the replay a chance to participate as well. So I came up with an idea. Jill helped quite a bit. I think she actually came up and said, do one outside of the normal way. And I was like, yeah, that's a good idea. So I did a video back in February. It was a deep dive on this company called NVIDIA. So in this video, basically, I broke it down, talked a little bit about whether or not the AI bubble was about to break and what that meant for NVIDIA's future. So I thought it was a great video. Now it underperformed a little bit. So here is the challenge. So the challenge, and I will drop this link. I'm going to put it down below. It's going to be all over the place. So don't worry. You don't have to worry about it right now. But right now, this video, it only has 557 views, and it's a great video, but it's an American company. That's probably why. A lot of times when I do a deep dive on an American company, they don't get very well. So here's the challenge. Between now and Wednesday, so the market close, if we can pull off a very meager 50 more views, so we take the views on this up to 607, bang, you guys have earned it. Now, I'm going to say this. We may have that one person out there that's like, oh, I'll just watch it 50 times and we'll get that market close. Don't do that. If you want to participate, watch it once. That's it. Once. Don't watch it twice, 3 times, or anything crazy like that. Just watch it once. This way here, all of the people who are watching this on the replay, you've got that opportunity too. You can just go and say, oh yeah, I'll check that video out. And here's the beautiful thing. And this is the reason I chose this video, is because NVIDIA had their earnings call this week, and we all saw what happened. Holy banana bread. They broke above 1,000 for share price. They announced a 10-to-1 stock split. They boosted their dividend too. Now they boosted in all fairness, the reason they boosted their dividend as much as they did from 4 to 10 cents is that way there, when they do the stock split, that would be 1 cent per share. So that makes a lot of sense. So it's pretty cool. But here's the thing. After you rewatch or watch for the first time, this deep dive I did on them, and you don't have to leave a comment or anything to say you did it. I love comments. Feel free to leave comments, but just sort of pay attention and sort of say, did I call it right in that video? That's the question. That'll be the question. Did I call it right in that video? So feel free. Like I said, I'll drop this link a few times throughout the show. And if you guys pull off, like I said, a meager amount, 50 more views on that thing, we'll have that Friday show. So I'll let you guys know on Wednesday whether or not we did it. Or, heck, right now, I told you, right now it's got 557 views. So, you could probably just check it out a little bit later in the weekend, see if we're there yet. So anyway, that'll be fun. Everybody can play, and that's awesome. All right. Whew. Before we go any further, I just want to very quickly call out Blossom. So Blossom, as you guys know, that's the social media app for investors. Pretty darn cool. I'm over there. A lot of your favorite Canadian YouTubers are over there, like Brandon Beavis and Canadian in a T-shirt, a whole bunch of us. And more importantly than us, a lot of you guys are over there. So it's just a great way to connect, talk about stocks, get ideas, all that fun stuff. If you have not yet checked out Blossom, what are you waiting for? Link is down below. When you get over there, follow me. I will follow you back because I can't wait to see what you guys are buying and all of that fun stuff. Okay, before we go any further, let's get to the chat because you guys have been just ramming the chat, just boom, boom, all kinds of stuff. All right, and I love it. We start with Jonathan, who I made it. Yes, if I recall correctly, you were late to the market close last. But always good to see you on time. Marco says, "Hola, let's do this." And only 48 more minutes. Yeah, you got in nice and early this time around. Bismarcky's in the house with a happy Sunday, everybody. We got Jordan in the house. Hello, Jordan. Good afternoon, Candace, and everyone in chat. Hope all are well. Hope everything is going well for you over there in Southern Ontario. Yeah, the next one right here, Prairie. Good afternoon, Banana Bread Brigade. Afternoon. It's always good to see you, Prairie. Good to see. Also good to see good vibes. Hello. It's funny. One day, and yes, happy Sunday all. One day somebody said, "Oh yeah, when you're sort of introducing the chat like that, it always reminds me of Romper Room, and we're always hoping our names will be called as she's looking in the magic mirror." And now every time I do this, that I call everybody out who's saying hello, I keep thinking about Romper Room as well. So that's kind of funny. We got Lisa in the house with a hello. And here's Mary in the house reminding you guys to hit the like button. So hit that like button, turn it blue. Let's pump this out to the algorithm so people will know we're in here and they can mosey on in and check out what all the fuss is all about. We got Paul in the house with a quick old hello. And let's see, Ian is hello all, SPYI, and the Tfsa have a withholding tax. Can you explain how withholding tax works? Yes, I can absolutely explain how withholding tax. So withholding tax, when you're looking at a foreign dividend or any kind of foreign profit, well, but let's just stick with dividends. We'll make it easy. So when you're looking at foreign dividends, when what happens is the IRS, so the big tax people, sort of like the American version of the CRA, well, they want their taxes. So what they do is they take 15% of dividends coming out of there. Now, that will happen if you have something in a non-registered account or if you have it in your TFSA. And the reason for that is that there's a tax treaty between Canada and the US. And in that tax treaty, it specifies the RRSP as being our registered account. It does not recognize the TFSA as a registered account. So because of that, when you're holding American stocks in your TFSA, that 15% is gone. They take it. And there's nothing you can do about it. It's just gone. Now, the reason you can't get it back is because, well, we're not going to tax you in your TFSA. So the whole idea of a foreign tax credit, which is what, like if you were holding American stock in your, in a regular non-registered account and they took the 15%, you could apply for a foreign tax credit to get it back. And the reason for that is that because they took it, you've already been taxed on it. So what that foreign tax credit does in that situation is it means that the CRA is not going to then come in and tax you on it because you've already paid your taxes. Even though you paid it to the US, that sort of prevents you from doing double taxation. That's what that's all about. So you don't get taxed in two spots from both the US and Canada. So I wish we could have some kind of a credit so we don't get taxed from both the provincial and the federal, but that we can't do anything about. So yeah, so that's what happens in the TFSA. Now, one other thing is if you are holding a Canadian company and that Canadian, so let's not say a company, but a Canadian ETF, and that ETF is holding American dividend stocks, well, the withholding tax still comes in. It doesn't come in the way you think, though. So it's not that they're taking money from you. They're taking money from the ETF company. So that management company is losing 15% of those returns that could be coming in for them. So they're losing that. So when they tell you that let's say they're going to give you an 11% yield, you're still going to get that 11% yield. But if there wasn't withholding tax that they had to pay, maybe it would have been like 11.2% or something like that. So that's one of the reasons why some people will say, well, if you're going to get an ETF, let's say an S&P 500 ETF, well, don't get that. Just get the American version and throw it into your RRSP, because then they recognize that as being registered. And so you won't get any tax taken off. However, and this is the thing I always say, when you put something in your RRSP because you don't want to pay a 15% tax, you have now made the whole thing 100% taxable down the road. Although the amount of your principal that you put in, you're going to be able to use that right now to avoid paying some taxes. So it kind of all balances out. All right. Trevor's in the house. I'm late here, but banana bread forever. And Prairie has that NVIDIA video, the NVIDIA video queued up for after the live stream. There we go. So those of you who see that, NVIDIA live, the NVIDIA video, if we get 50 views on that video, it's a February video, but it's very relevant to today. Then we're going to do the bonus this week. So the bonus Friday market close, it's just 50 views on that. And it doesn't have to come in the shows. We'll look at it on Wednesday. So this way here, those of you watching this on the replay, yeah, I'm looking at you, Joe, and you, Frank, and you, Harvey Hump Scruncher. I'm looking at you guys. Go watch that video. Pause and watch it after. Anyway, oh, that was dumb. That was a really dumb. That was kind of lame too. But hey, that's fine. Let's get to Sammer. Sammer's in the house with a hello, guys. And Paul says cross country checking. Nice. And here we go. Go Pogo with a Wahi Guru. There we go. And another Wahi Guru. And I'm not going to say it the third time because I might actually summon something. Two is fine, but not three. Stan says hello all. And 9. Let's see. 9 says, you said a couple of streams ago that the Liberals wanted to increase tax on stock buybacks. I only heard about the capital gain tax increase. Okay, so that's already in place. So this is something that they did earlier in the year. It's a 2% tax on stock buybacks. So if a company, and I have to see the actual legislation in front of me. I don't know if there's a minimum, but yeah. So there is. I'm pretty sure there is a minimum. So I think if you're doing less than a certain dollar amount, and I don't know what that is, then you don't have to pay. But, if you got a bigger company and they're doing a whole bunch of stock buybacks, yeah, then they're going to pay a 2% tax on that. And yeah, it's just one of those things. I think the government sort of looks at it saying like, if you're doing these buybacks to, because your company's doing well and you can be paying more taxes. This government is not very, I would say, stock friendly. Not very stock friendly at all. Abalash says, if you get a USD ETF containing USD stocks in Tfsa, do you not get any withholding tax? Oh no, you do, absolutely. So if you have a USD ETF in your Tfsa, you're going to get a full 15%. No ands, ifs, or buts about it. And that 15%, you can't get it back. Now, that USD in your that USD ETF in your RRSP, you're fine. They're not going to take anything from it. They're going to let it all flow in because, once again, it's all double taxation, right? Because when you have it in your RRSP, when you pull it out, let's say you're 65 and you're pulling that out, you're going to get taxed by the Canadian government then. So the whole idea behind all of these tax laws is to prevent you from paying taxes twice. So you're not going to pay the CRA and the IRS. You're only going to pay one. And that's kind of the way it's all designed. Holy banana bread. Everything. All right. Just give me a second here. There we go. There it's working. Everything's sort of highlighted on my screen for a second. And I'm like, what the banana bread is that? But we're back up. Amvas says, just smashed the like button. My friend prefers an advisor. I found Tom Trewell, who provided a free tax course and offers free consultations. Not sure the MER, but holds private REITs and royalties. I'm always a little bit leery. Like, I don't know. I don't know who Rob is. That's kind of my first thing. So I can't really give an opinion on the person. And if it's a free tax course, I always say be careful, because a lot of times with these free courses, they'll bring you into it, and it's basically they're giving you a taste before they then show you, okay, what now? Here's my paid services. And it may be worth it, but find somebody who's been through the process, talk to them, always get all of that input, even Yelp, if the guy's on Yelp, you can look at that as well. Now, yeah, let's see. Not sure of the management expense ratio, but holds private REITs and royalties. I do like royalties, but I don't have enough information on this guy. Be careful. Be very, very careful. I do know that you're fairly new to investing, so you want to be more careful than anything else. Like, if I wouldn't just jump in, I would do, like, when I talk about doing due diligence when you're looking at stocks. If you're looking at somebody like this who's going to help you, do the due diligence as well, because there are a lot of people that will take advantage of you. And to be clear, I don't know if Rob is one of these people or not, but find out everything you can. Go visit like his, see if he has any Yelp reviews, maybe see if he's on LinkedIn, see if you can find some people who've used him before, and talk to them before you get too deep into it. But yeah, also, as well, if you're looking for recommendations in that area too, you could also throw it up in the Discord and see what, because this community has definitely been through a lot. So people might know some people as well. Just something to think about. All right. DSDV says U.S. dividends and U.S. interest gets withholding tax in Tfsa. So yes, and you can't get it back. It's just gone, because that's just the way it works with your Tfsa. Because as I said, when it's taken from you in a Tfsa, it's only going to one place, which is the IRS. So you're not getting double taxed. That's the reason why the Tfsa is just not included. But if you look at the RRSP, as I said, you're not paying it to the IRS, but the CRA does eventually get that tax. So, if there's a possibility of there being two taxes, there's usually something in place to prevent it, as long as we have a tax treaty with that country. There are some countries where we don't have tax treaties with, where you can get screwed on both ends. It does happen. Amanda's in the house. Hello. What is the highest number of shares you have traded at one time, and what was the volume? Hashtag Starbucks. I need to have a drink. Oh gosh. So this one time, I can't remember the exact number of shares, but I was looking at, and it was this little energy company, and I had sunk a significant amount of money into them, to the point that it actually drove the price up. And I saw the price go up, and I'm like, oh, because I was just planning on getting in, riding out a dividend, and then getting out. But so I accidentally drove the price up. And at that point, I'm like, I'm going to get out. So I got out. And then I got a call from my broker, because the Ontario Securities Commission was a little bit concerned with what I had just done. So I had to explain, I am so sorry. Like, I made nothing on the deal. Like, I didn't make any money. No money was made. It was, because even though I pumped it up, as I pulled it out, it crashed as I was selling. So I ended up with the exact same money on both sides of this trade. But because it was a small company, it didn't take much to really completely screw things up. And I kind of learned a lesson. They didn't have the best volume. They really didn't have a best volume either. It was a smaller volume company. And I was just like, okay, I probably should have did a little more due diligence before I did that. So it happens, though. It definitely happens. let's see. Do you think Wealth TAD 2? Okay, let's go to the second line here. Do you think a wealth tax will... Oh, all right. We'll go to the third attempt here. Do you think a wealth tax will be coming up in the future, considering the growing disparity between rich and poor? It's hard to say. This is something where you have to look at government. I mean, government, even though they would like to say that there would, they like to sort of help out the lower end of the spectrum. The problem is they're all supported and backed, and all of their finances come from that spectrum that doesn't want to get this tax, a wealth tax, put on them. So I don't think we'll see one of these. I really don't. I think what you're going to see, that when the conservatives come in, they're not going to be thinking about wealth taxing and taxing the wealthy. They're just going to be thinking about how can we lower taxes to make things better for everybody. So I don't think that will ever be something we have to worry about. All right. Marco says TFSA equal withholding tax, period. RRSP is the only exception. So yeah, TFSA, withholding tax, bang. Yeah, and you can't get it back. So it's just gone. So here's the thing. For me, when I have, like in my TFSA, like right now, and you guys will see this in the next 0 to 100K, I did add a US ETF. It has really tiny dividends. So I am going to lose 15% of those dividends every single time they pay. And I believe they're semi-annual. So it's not like I'm going to see these dividends, even if I didn't get the 15%, they're not really going to add up to anything. This was more of a growth play than anything else. So yeah, but TFSA, you lose that withholding tax. No ands, ifs about it. So when you're investing in American stocks, if they got big dividends, you may not want them in there. You may want to either have them in your personal account or in another registered account. All right. Yeah. Oh, I just did this one. Vic is here. dogging the cops. Oh my gosh. Did you speed to get here, Vic? Did you speed? That's what I'm thinking. Terry's in the house signing in. Hello, all. I used to tune in to CBC Cross Canada check up at this time on Sundays. However, I weep and feel CBC is rapidly losing its way. Candace, are you the new Cross Canada checkup? I just might be. Hey, everybody. Tell me what cities you're in. Let's do a Cross Canada checkup. That's funny. But sure. You know what? I maybe the CBC could just, if nobody's listening to them at this time, they could just rebroadcast this. I want to get paid a little bit though for that if they do it. 9 says, yeah, it would be nice if there were no tax on buybacks like in the States. Buybacks are great if you own shares. Yeah, no, they are absolutely. And the beautiful thing is, even with these buybacks, right? They're not going to, you're not going to be taxed. It's that company. They're just trying to encourage them not to do it. So, or actually they're hoping that they do it because they just want a little piece of that pie. Friggin is in the house with an afternoon Candace and chat. Hello, Friggin. Good to see you. King of Day. Hello, all late, but I made it. Friggin says, if you pump it up, people will sell on top of you. There we go. Any info in the government trying to pass a digital content tax? That I haven't heard too much, but I was looking at some information on that C11 bill that passed. So the C11 bill, that's that kind of, that internet, sort of the internet content bill that sort of looks at, Canadian content and how it's going to be newly regulated by the CRTC. It's the one that Poilievre has actually said he will kill it. As one of his first acts as prime minister. So the CRTC dropped out their schedule for how they're going to implement it. And the good news is, I don't think they know what they're doing yet because they have a whole bunch. It's not that they don't know what they're doing. It's just, well, they don't know what they're doing. So because of that, and they recognize that, they've got a whole bunch of different committees and meetings, and they're going to drag this thing out for almost a year and a half. So they don't think they're going to be able to even implement it until late 2025. So anybody who has followed the drama of the C11, you don't have to worry about it for a while. It will, and here's the thing, at that point, Polyev will be in, and if he holds true to what he says and he repeals that act, it may never be an issue at all. All right, and Jackie is saying, be careful of private REITs and royalties. I had that, and it took 6 months to get my money out of it. The private investments can have many, many conditions on them. Buyer beware. That's what we were looking for. Thank you, Jackie. That's kind of that whole thought process where you want to be doing insane due diligence, not just on the stocks, but on, if you're looking at a financial advisor, there's a lot of financial advisors. I hear horror stories all the time. Now, there are good financial advisors out there. Let me just say this. There are ones that are really, really good, but there's also a lot of really, really bad ones out there. And you kind of want to make sure that if you're going to get involved with a financial advisor, just do your homework on them. Make sure that they are one of the good ones and not one of these bad ones. Now, another thing to keep in mind too, when you're dealing with a financial advisor, let's say they work for the bank. So if you went to TD Bank and you were dealing with a financial advisor who works for TD, they kind of are incentivized to push a lot of the TD products on you. So in fact, I mean, a lot of they have sales goals and objectives to that. So you always have to remember when you're dealing with a financial advisor that is associated with a particular bank, they're going to be biased. There are going to be bias there, and they will probably try to sell you not the best solutions, but the best solutions for that bank. So you got to be a little bit careful with financial advisors. But not to say that there aren't good ones out there. There absolutely are. Just be careful. And Amvas says, Candace, I appreciate your thorough analysis. I'm wondering if you have or will do a video on your whole process for Mr. Math. How do you streamline this for your many stocks? Thanks for all. Yeah, I can absolutely do something like that. Now, those tend to, if I'm very honest, those tend to be things that I do, more on the channel member side. Like, I think there's actually some channel member videos out there that sort of show how I do some of the stock screeners and things like that. But yeah, we can definitely look at something like that. And actually, once we get through the news, we haven't even started the news yet. Once we get through the news, you can always ask that a little bit later in the show, and I can pull something up and maybe show you a little bit. Yeah, absolutely. That would be kind of fun. Fuzzle, I think you're a new person. I don't remember seeing your name before. Let's see. What do you think of Hammond Manufacturing? I love Hammond Manufacturing. So HMM. Here's the funny thing. A little more than a year ago now. So basically, when was it? I don't know, maybe February or something of last year. I was starting to point out two companies, HPS.A and HMM.A, and was letting people know these are going to be big. And the people, like some people in this community, jumped on these stocks, and this was before they blew up again. They're really, really good. Now, what I love about Hammond is that they have positioned themselves in a place like they are. So they basically they service all of North America and India, because India's economy is absolutely exploding. The Indian government is looking to build a lot of infrastructure, and this is exactly what the two Hammond companies do. So between Hammond Manufacturing and Hammond Power Solutions, they have a lineup of customers. Like, they're turning away people. They're like, you're gonna have to wait. Like, there is a waiting list for their services. So these are companies that, it doesn't matter to me what's happening right now in the stock. So when the stock is down, like right now, Hammond Manufacturing is down. I think they're around $10.50, $10.60, somewhere in that area. They'll be back up above 11 sooner than you know. So I do have a lot of faith in those. For me, those are long-term holds. I actually, in the 0 to 100K challenge, I do hold Hammond Manufacturing in that. And I have another retirement account that does have HPSA as well. So I do hold both. All right. Marco says, foreign dividends in a taxable account counts as income. So you are paying a tax either way. Yeah. And that's the thing. You're always going to pay your taxes. Even when you sort of think, the only real exception is that TFSA. I mean, with Canadian stuff. So when you're putting Canadian stuff in your TFSA, that's the one little loophole that you have. But outside of that, you are going to pay taxes. Now, mind you, if you put a big US growth, like let's say, for example, you put Nvidia in your TFSA, yeah, you're gonna lose 15% of that dividend, but it's not a lot. So imagine after the stock split on each share where you're getting a penny, you're gonna lose basically 15% of a penny each time. So that's not a huge amount. Not for me, not enough to really be too concerned about. Because that's a stock you're going to get the growth, because it'll start like right now. They're like at what 1,046, I think, somewhere in that vicinity. So right now it's already going to be around 104. It might even be 100 and it might even make it to $110 a share. Now, here's the beautiful thing though. When it comes to a share split like this, traditionally, these companies do tend to do a tiny bit better over the next year than they would have. And that's just because all of a sudden they become more accessible. More people, because some people who don't have access to fractional investing will be like, "Oh, I can afford $100. I couldn't afford 1,000, but I can afford 100." And plus, and I mentioned this as well on the market close, you open them up for easier options trading because as you have to buy a bundle in options, you buy a bundle of 100. So 100 of $1,000 stock, that's $100,000 to actually do some options on them. But $100 stock, you only need 100 of that. That's like $10,000. So it does open them up for a lot of pretty good action. Now, speaking of Blossom, speaking of Nvidia, we do have a challenge this week to get you guys a bonus market close for Friday. And that is that Nvidia, basically a Nvidia deep dive I did in February. We just want to get an additional 50 views on it. We get 50 views. So it was at 557 when we started the stream. We want to get it up to 607 by Wednesday. If we get it there by Wednesday, then you guys have your additional market close this week. So that'll be fantastic. All right. And let me just grab this link one more time. I'll drop it in the chat one more time, and we'll mention this again a little bit later. All right. Sashin says, what do you think about Bank of Canada's interest rate in June? Any implications of that on the markets? Okay. Here's the funny thing, and we're actually going to talk about that really. You know what? Your question ties into my first news story. So let me just do that first news story and answer your question at the same time. So, boop-a-doop-boop-boo. Here we go. We got a beaver in the Bank of Canada. I do like beavers, so I use them a lot in my images. I apologize. If you do not like beavers, just close your eyes. Just close your eyes and just listen. All that fun stuff. So, first of all, we were looking at our CPI, and that did come out on Tuesday. And I was mentioning to you guys that we needed a really good CPI to get our rate cut back for June. Well, we did get a really good CPI. So they were expecting 2.8% year over year, and that came in at 2.7%. That's fantastic. We actually beat expectations. So we're moving in the right direction. Now, what's really good is core. So core CPI, where we exclude like food and gas, we were expecting that to come in at 2%. It came in at 1.6%. That is absolutely fantastic. So all of the people who had basically already flip-flopped from June and said it was going to be July, they're starting to flip-flop back. A good number of analysts are saying, oh, gosh, this is a good chance that we could be coming back to June. And maybe, I mean, this inflation rate right now, it's a 3-year low, which is great. And it is exactly what the Bank of Canada wanted to see. So before that CPI number came out, most analysts were actually saying that we had maybe about a 40% chance of a rate cut in June. Now, after that, we're all back to that 50-50 scenario. Now, I have personally been adamant. I've been saying, yeah, we're going to get one in June. I've been saying it since, well, the beginning of the year, pretty much. So I've been thinking about June, and here's the thing. I went and flip-flopped. I flip-flopped to July, and I'm sitting there saying, okay, well, I flip-flopped. I only get one flip-flop. I'm not going to flip-flop and then flip-flop back, because that's a lot of flipping and flopping. So too much flipping, too much flopping, not going to do it. So here's what I'm thinking. I'm thinking I hope I'm wrong. I moved to July, so I'm going to stay in the July camp. But I'm really, really hoping I'm wrong, and I'm hoping we do see it on June 5th. So it's not that far away. Now, I think the Canadian market, they've already priced in either a June or July, cut. So I don't think it's going to really impact things too much, like when it happens. But the longer term impact, hopefully that didn't make a loud noise. I accidentally hit the mic with my finger. The longer term impact is that it's going to start to improve things. So all of a sudden, you're going to have a lot of these companies that they're going to start seeing some of their interest payments, so the servicing of their debts, they're going to start to come down, and that is going to help. Now, it's not going to be overnight. It's going to have, so let's say, for example, we'll use banks. So, banks, are looking for some of those rates to be coming down. Also, REITs are another really good example. It's going to be kind of a delay thing, sort of like when we raise the rates. It takes a little while before we actually see some of the effects on the economy. Same idea when we lower the rates. So, just because the rates are now lower, you still have to wait until your next payments to all of a sudden have excess cash that, you might have had it set aside for making the payment at the full interest that it's at now. So it will take a little bit to filter that in. But overall, this is the beautiful part, is that there could be some voters, sorry, this is not an election. There could be some just some overall joy. All of a sudden, people are like, oh my God, it's finally happening. So that could create, investors to be a little bit less grumpy. So that could certainly have a knock-on effect on the Canadian side. So we probably will have, I imagine we'll have some pretty nice green days, a couple of them, until we sort of sink back to the U.S., because we do follow the U.S. to a certain degree. So that's kind of where I'm thinking with that. Look at that. We snuck in a news article as a question. Good job, Sashin. I like that. Marco says, so you could be paying 40% in a taxable account or 15% in a TFSA. Well, yeah, it really boils down to, though, it boils down to what your tax rate is. It also boils down to once you have something in a non-registered account. So with the U.S., you're going to pay full taxes on it, but that's the thing. So with your tax credits, depending on where you're at tax-wise. So like if you're making a lot of money, for example, you will be overall paying more. So it's usually not great to have things in your non-registered account. So usually what I say is if you have a high dividend a high dividend American stock, it really kind of makes sense to put it into your RRSP, just so that way there you're not going to be paying taxes. Or if you're in a situation where you're going, where you've got a lot of income, and you really just don't want to be creating any additional income, then sometimes putting it in your TFSA and taking that 15% bite on the dividends is fantastic. Because here's the thing. If you put it in a registered account, you have a tax credit on the dividends, but you don't have a tax credit on the capital gains. So, you'll be looking at paying, on 50% of those capital gains. So yeah, it kind of works out that way. All right. Sammer is in Stathroy as we do the Caros Canada checkup or checkout or check something. Friggin is in Sarnia and Amvas is in Vancouver here for the Canada's Cross checkup. Oh, this is hilarious. Prairie CCC hosting the BBB. There we go. DSDV, investing in capital markets is one of the few things you don't need a professional to help you do. Well, that's true. I mean, the big thing is, and this is what I always say, if you're brand new to the market, stick with investing in things you understand first. And if you really don't understand a lot, you're probably really better off to look at just going with a straight ETF, something like VDY or VFV. There's a whole bunch of different ones that you can use. And then that way it takes a lot of the decision power out of your hands, but then that gives you the opportunity that you're still in the market, you're still getting dividends, you're still getting growth, but now you have that opportunity to start learning. And as you learn and you start to feel comfortable and you start to research companies, let's say, for example, let's say one of the companies that you start to research is Fortis. And then you're like, oh, I really like Fortis. I would like to have a part of Fortis. Then you can start to expand to some of the individual companies. Or you may just say, you know what? I really love ETFs. I may want to stay in ETFs. And that's perfectly fine too. There's a lot of valid ways. It really comes down to you have to look at what your investment goals are, what your objectives are. Why are you investing? What are you hoping to do? How old are you? That can be another big issue too. Like if you're young, you're probably, you've got the time that you can get into a lot of heavier growth stocks. And even then, if you fall into a bear market, you have time to wait those out. So there's a lot of different factors that come into when you're building your actual portfolio. So just something to keep in mind. All right. Mary is saying hit that like button, folks. And while you guys hit the like button, I'm going to have some Starbucks right here. Oh, and there is something I do need to do. Let me do this right now. All right, here we go. So next Sunday is the first Sunday of the month. And that means, well, yes, it does. It means that's the day we give away some free memberships. So I have just dropped one free membership. So if you take a look at this, and congratulations, King of Day, you won, by the way. Underneath, if you look at the little thing as it scrolls up, if you see another box underneath the free membership that's kind of gray, and it's talking about turning on membership gifting, you got to turn that on if you want to win. So if you're going to be here next week and you're thinking, oh God, I'd love to win a membership, then make sure that that is turned on, because if it's not, you can't win. So that kind of sucks. So make sure that's absolutely turned on. All right. And to make that example, King of Day won. So congratulations once again. That's fantastic. Simple Dollars says, I saw a few institutions announced they are switching to T+1 tomorrow. Okay. Interesting. Ian says, I have BHP in my TFSA. Don't think I ever had a withholding tax. It's an Australian mining company. Keep in mind, are they on the Australian exchange, or are they a Canadian company investing in Australia? That's what I have to ask. Because if BHP is a Canadian company investing in Australia, it's a little bit different, because then that withholding tax is taken from the company and not you. So I don't know BHP. I don't actually know who BHP is other than what you just told me. But yeah, that's kind of interesting. But also keep in mind too, when they take the withholding tax from you, it's not like they tell you. They don't say, okay, here's a little fee breakdown. This was taken for withholding tax. So sometimes when you're looking, like if you have a company that has a low dividend, so let's say they have like a 0.0975% yield, most likely, unless you actually do the math, you're not even going to realize they took the money from you, because 15% of 0.795 or whatever I said is not very much. It's, it's easy for you to not even recognize that it's gone. King of Day says, what is the definition of a long-term hold for you? So let's see, retirement, 10 plus, or until fundamental deterioration. It's a good question. I think when I'm looking at long-term holds, I'm usually looking at things that I plan to hold for, more than a year or even 2. So for me, that would be a long-term hold. For me, a midterm hold is usually 6 months to perhaps a year. So 6 months to a year. Anything I'm planning on holding less than 6 months, I would call that a short-term hold. So that's my definition. So keep in mind, for you or for any of you, long-term might be like, long-term for me is 5 years. But, and to me, that's, once again, that's an age thing. If you're like 20 and you've just started investing, you might look at a long term as like, yeah, well, 5 years. If I'm holding something for 5 years, that's a long time or something like that. So, whereas as you get closer and closer to retirement, you don't have as much runway for what long term is going to mean anymore. Let's say, for example, if you're sitting here investing and you're 75, long term might not be that long. Long term, it's hard to say. It really, it's, to me, that's a very it's very perspective related. So it's very relative in that case. All right. Let's get over here to Mary. What would you do if you have a mortgage coming up in November? Oh, that's a good question. So we'll have, at this point right now, we'll definitely have one rate cut. But we might have a second. We probably will have a second by November. But that's the thing. If you're looking at renewing your mortgage in November, you have to consider the fact that most of the rate cuts are going to come after you've renewed that mortgage. So you're in that situation where you have to sort of think, would a variable make sense? It could. So you have to sort of look. And it also has to do as well with whatever kind of deals that you can get. So, I mean, if they offer you a fixed rate that is, that's acceptable, you might want to go with it, even though, it's going to be a hard situation. Because here's the problem. The problem is we don't know how low they're going to go. Like, I don't see them going below 3% at all over that time. But that's all going to happen after you renew that mortgage. So it's kind of the thing. I would basically look at both deals before I would decide and see what they're offering. But without any information at all, I'm kind of leaning a little bit towards variable. But once again, I would need to see what that difference is going to be. Because sometimes if that difference is too great, so if they're charging a lot more for a variable to start, you have to sort of consider how long is it going to take to get below that. Do the math. Always do the math. Let's see. Marco says rates were too low for too long. 5% should be the baseline. Yeah. Well, other than the fact that right now, I mean, the Bank of Canada, they're looking at trying to get us down roughly around 3%. So we'll have to sort of see. Now, it could be, and I've said this before, it could be sort of like gas. Like the price of gas will go up and get nice and crazy high, and people will complain, and then it will come down. It'll never come down to where it was, but it will come down, and everybody gets used to the new low, and they're happy. Then they go up again, and people are like, gas is too pricey, and it comes back down, but it never gets back down. So we could be in a situation like this where, maybe rates will get down to 3%. Maybe it'll stay at 3% for half a year. And, the next economic situation that causes them to raise hikes, maybe it'll go back up to 5, maybe it'll go to 5.5. And eventually it'll come down, and maybe then it will only come down to 3.5. It's hard to say what they're going to look at. There's a lot of factors. There's a lot of factors out there. So we kind of have to sort of see, how that's all going to boil down to. Amanda says, I hope the BOC factors in the mortgage renewals. The U.S. has 30. Yeah, exactly. So this is a big point. The U.S. has 30-year mortgages. I think there are a lot of renewals coming up in 24, 25. There's a wave. Like, they've already begun. There's already people who have already had their mortgages come up and have been sort of put into some of these difficult situations, but they are coming. That's one of the reasons I think that the Bank of Canada, they know they need to act sooner than the U.S. because the U.S., you have longer mortgages. So as Amanda was mentioning, 30-year mortgages. So when you got in those mortgages during the pandemic at really pretty much rock bottom, if you weren't locking them in for 30 years, what were you doing? Because that's why they don't have that issue in the U.S. that we have here. We have, all of these things. Now, the banks are doing everything they can. I'll give the banks credit, whether it be just pushing, amortizations out really long, they're doing whatever they can so that they don't have to foreclose on houses. They don't want to start doing that. So it could happen. It could happen. We just have to sort of see how that's all going to boil down to. All right, Bismarcky is in the greater Toronto area, the GTO. And Jill says, cross-country checkup is a call-in show. Center the boat, one topic a week. Okay. And Mary, Mrs. Rex Murphy. Yes, rest in peace, Rex. He passed away last week, I think. I think last week for sure. Prairie says, congrats, King a Day. All right. Ian says, I bought BHP on the New York Stock Exchange through BMO Investor Line. Okay. Interesting. Interesting. I'm surprised. I would just double check the math. See if it's a situation where you have such a small withholding tax coming off that you're just not noticing it. But it seems to me that if there is dividends on it, you should be losing, 15% of those dividends. And I dodged another gifted membership. Oh, and Trevor is in Brampton. All right. All right. We have more news. We're slowly getting through the news. And yes, more beavers. I know. So Canadian retail data has come out. Now, retail sales, they've been pretty bad in our first quarter. Like they've been down quite a bit. However, we got April's report and they were forecasting an increase of 0.9%. The actual increase came in at 1.9%. So, sales, at least retail, a little bit stronger than expected. Now, receipts for retailers, they jumped 0.7% in April. That's the fastest pace since September. Now, last month in March, they actually dropped 0.2%. So, it's nice to see it go up. But, I mean, the Bank of Canada is not going to like it because basically they want to see weak retail because that will, of course, signal that Canadians can, basically it'll signal that things are working. So if they look at it, they could potentially look at it and say, oh, they're spending more. Well, maybe they can weather them higher rates a little bit longer. So this is 1 point in favor of July. But it's kind of a weak one. I think it's a weak one. I don't think that they're going to take that into consideration too much. So I think we'll be fine when it comes to that. All right. Now we'll pull Trevor off the screen here. All right. Let's get to our next story. All about EV tariffs. So last week, those of you who've been following the news, Mr. Biden announced some tariffs on Chinese EVs, semiconductors, solar cells, and batteries. So their goal, their goal is basically to protect American manufacturing. And basically, they're looking at some of the businesses and key sectors of the economy from some of the stiff competition posed by some of these cheaper Chinese imports. So it's all part of this issue with China where they want to move things back to North America, especially critical minerals. And last week we mentioned a little bit about some of the money that they're starting to pump into some of our Canadian mining companies, which is fantastic to see. Now, here's the issue. So the U.S., they've not told Canada directly to get on board with this program, but people are sort of thinking, well, should we get on board anyway? So it's kind of interesting. So here's a couple of interesting points about whether or not we should get on board. So the federal government, they've set a goal of making 100% of new vehicles basically zero emission by 2035. Currently today, we're at 11%. So we got a long ways off. Now, if we were to follow suit with what the U.S. is doing with these tariffs, here's where the issue comes in. A lot of experts are thinking that that would prevent us from hitting that target. They said that it won't be possible if we adopt American-style tariffs because the biggest reason for that is if we use those tariffs, it's going to rise the price of electric vehicles, thus making them harder, well, basically making them a lot more unaffordable for people to be able to purchase them. So that's kind of the issue that we're running into with these tariffs. Now, here's the other thing, though. If we don't impose the tariffs, and this is kind of on the pro side, Well, especially with our EV and battery sectors, the problem is, even though we're plowing lots of money, so billions of dollars is flowing into this between us and the US, but all of that could be for naught if they're pretty much wiped out because of the low price of some of these Chinese competitors. So we kind of have to look at it both ways. I would say, personally, oh gosh, I won't sit on the fence on this one. I would actually say let's actually, even though it'll increase the price of EV vehicles, I would be okay with us actually, being pro tariff in this case. So it does protect our industries. It does, it's we're not dealing with all of that competition. So it's not a bad thing, but it would mean, though, that we would probably have to back off on that goal. So we wouldn't have 100% by 2035. And to be honest, right now, our infrastructure, especially our electrical infrastructure, it can't handle all of those EVs anyway. So it may not be a bad idea to sort of step back a little bit. So just sort of what I'm thinking when it comes to this. So, we'll see what you guys think. All right. Invest says, my initial self-invest has 10% of diversified portfolio while market's high. I'm finally starting this week with HMM, NWH, and also PZA or PZA. Thoughts, please. We'll look into joining membership. Okay. Look, that's fantastic. Well, next Sunday you might even win a membership. But here we go. So HMM, I'm loving them. They're a very good growth stock. So Hammond Manufacturing, we just recently, we just talked about them a few moments ago. Northwest Health, now that's a REIT. I do like them. I think that they have a good chance to certainly react well to the rate cuts. So those are definitely some great choices. Now PZA, their price right now is a little bit on the low side. So that's not we're not at a bad entry point for them. That sector in whole, so things like PZA, one of my favorites, Sir Royalty, they've taken a little bit of a hit. That whole sector is down a little bit, but as the rate cuts start to come in, people will start to feel a little more comfortable with spending money on restaurants and that again, and that will definitely help that sector. So they're not bad. They're not bad. They're not some bad picks at all. And like I said, and here's the beautiful thing. I'm pretty sure I've actually got deep dives on all three of them on the channel. Feel free, of course, I know you're on Discord. Feel free to ask questions on Discord about these things. If I don't answer them, somebody in the community definitely will, because Discord is just absolutely pumping. So fantastic over there. Y Video says, hi, people. I'm late, but I'll watch the replay. There we go. Sachin is back for another comment. Do you know if there are any updates on Loblaws and Walmarts, along with others signing the Grocery Code of Conduct? The last time I saw, Loblaws was on board if Walmart and others were. Yes. So Loblaws has come out and they've said, sure, we'll sign it if the others do. So that does put some pressures on the others. As of right now, I've not heard anything else about whether or not, Walmart or, any of the other remaining ones are willing to sign it yet. But the good news is, though, like from the CPI as well, we have noticed that food is starting to come down a little bit. So that's not a bad thing. But yeah, it would be nice just to get everybody on board. Or even then, I hate it. I hate the whole idea of this grocery code of conduct. It's just kind of one of these things. Like, I know the government is looking at different ways to try to combat it, like bringing in more competition, but there's problems, of course, with that. One of the big problems being if you try to bring other chains from the US in, it's really hard for them to survive in the economy that we have here. Kind of like what happened to Target. Target came in and they just could not. They could not become profitable, and they didn't last very long in Canada. A lot of that same type of issues would happen for most stores as they try to move into Canada. So it is a difficult situation. I will give them that. All right. Terry says, God bless Rex Murphy, a true Canadian institution within one individual who fell out of favor on account of his present country's itinerary. Yeah, and I mean Rex is he's I think he's from Newfoundland, just so he's got the Atlantic Canada what do we call it? The vibe, the Atlantic Canada vibe. But yeah, definitely a good personality for sure. And whether you agreed or disagreed with him, he was always still amusing to watch. Prairie says, I love my PZA. There we go. Absolutely. Jackie says, do you think the new ruling about selling alcohol in corner stores will increase alimentation couche-tard value? Here's the thing. Alimentation couche-tard, they're big. Like, we're talking like global big. Like, for example, they've got all the Bigfoot stores in the US. They own them. They're in Europe. They're everywhere. So Ontario is actually pretty much a small little area compared to their footprint itself. So that will they make more profit in Ontario? Probably, but I don't know if that will really impact their overall price a ton. Maybe it'll help a little bit, but I don't see it as being a major contributor. Marky says, remember when Walmart was actually good? Now horrible, empty shelves, checkout. I very rarely go into Walmart. So I haven't really seen it, but yeah. And here's the thing. There's a lot of people on both sides of the self-checkout. I was going to say lane, but we'll say just on the self-checkout argument. There's some people that are like, I hate them. Why should I do their job for them? That's fair. I can understand that. But then there's people like me. I can come through the self-checkout faster than I can go through a line because I have bad lucks with caches, with like human caches. It's like I will always get behind that person who wants to pay in unreasonably small coin sizes, and they're going to take 5 minutes to count out coins. And then the cashier is going to start counting, and I'll be standing there, the next person to be served for 15 minutes. Whereas with the self-checkout, I'm just boom, bang, done. Fantastic. I don't think we should get away. I don't think we should do away with cashiers at all. Some people love them. Some people love that extra human contact. Me, I just want to get in and out as fast as I can. So the self-checkouts, yeah, they work for me because I can get in and get out really, really fast. And I'm also really good with technology. So for me, it was never anything like, some people are like, I can't figure out how to scan. I'm just bang, bang, bang. I'm in and out really fast. So I do like them, but I can understand that some people aren't going to like them, and that's fine. And I know I've heard some stores have actually been removing them. So if we have to go back to, actually, it doesn't even matter because nowadays, like my groceries, Jill normally orders them and they get delivered. So I don't worry too much. Let's see. Why videos? Bismarcky, I agree. And Ian says, I have never used self-checkouts personally. There we go. It's funny. I used them. I think the first time I used a self-checkout was 1998 in Florida. So I went down to Florida for a summer. And yeah, I'm that type. I'm that Canadian who's like, let's go vacation in Florida in the summer. But anyway, I spent a summer in Florida and they had some self-checkouts and I was just like, oh my God, look at this. This is cool. But that was just me. I was very young too. So Bismarcky, when Walmart used a price check, I would go to the same cashier if she was working. She did my price checking for me. Okay, there we go. Nothing wrong with that. All right, let's get to our next news story. We're slowly getting through it. All right, so CPP has announced some of their latest fiscal year information. So the CPP investments overall in the last fiscal year earned 8%. That's their net return. Now, here's the funny thing. Their reference portfolio, so the portfolio that they're basically following earned 19.9%. So to me, that's a little bit of a fall. So they say that the lower return for the Canada Pension Plan Investment Board, they say it can be explained in part by higher volatility in the stock-focused benchmark portfolio compared with a diversified long-term return focus for the pension fund. So that's kind of what they said about it. They said that the pension fund's returns over the past 10 years have also fallen short of the reference portfolio. Or sorry, their pension funds. So they've fallen short for the last 10 years, but only by 0.3%, opposed to, well, this here is like what, 11.9% short. Now the portfolio that they do use as a benchmark, it does have 12% in Canada, and apparently they used to have 16% back in 2019 and then 31% in 2014. So they've been sort of removing Canadian stuff from their benchmark. And that makes sense in many ways, only because there's more money to be made in other parts of the world. When you look at the world GDP, Canada comes in at about 3% of the total GDP. There we go. Holy cow, having some trouble with that one. So it's just one of these things to sort of think about. So it's kind of a situation too that a lot of times the CPP, they've been sort of going very, very conservative. So a lot of times they will miss out on profits over being overly cautious. And that's one of the biggest reasons that they are at 8% instead of the 19.9. So we got to sort of ask ourselves, like, we want our CPP to grow. Maybe they're being too cautious. Maybe they're being a little bit too conservative. When you're looking at something as big as a whole between 8 and 19.9%, I would say they need to be a little more aggressive with that thing, because I know I'd love to have CPP when I retire. Let's grow it. Let's grow it. All right. Amvas says, thank you. Thank you and all for your responses on your chats in Discord. I went through your videos a few times for those picks for sure. Not much info, BK, but few was split. It's gone up already. Still okay? Okay, so BK, right, that's a split core for banks. I do like BK, so I will say this. There's a few split cores that I really, really like. So BK, ENS is another one. So ENS is basically a split core that does Enbridge. So I do like both of those split cores. Those are also split cores I find that you don't have as much issues when the markets get bad. So like they tend to not cut dividends, unlike split cores like FFN and a few others. So yeah, I do have, now I will be doing another split core video this summer. So I haven't got the date down yet, but I did actually plot a few more videos over there on Discord. And I'll show that to you guys after we're finished the news. I'll bring up Discord and we'll take a look at, I added to the schedule. Sachin says, what are your thoughts on DOL at this price point? I have been averaging out since a year now, but I would like to increase my stake on it. So Dollarama is one of these stores that, one, they're recession proof, because when times get tough, people will turn to Dollarama more than bigger retail chains. So that has helped them big time. Now, here's that issue. With them, with rate cuts coming down, you're going to have people start to filter back to some of these other retail stores. So it's going to help other retails. But will it hurt Dollarama? That's the big question. I think initially, no. I think the rates need to come down quite a bit before people really start saying, okay, well, I'll spend a little more then. I think people are going to be happy with not spending money at this point, just to be on the safe side. So I think that will definitely serve in Dollarama's best interest over the, probably, I would say at least for the rest of this year. And then it's kind of, will it actually pull them down? So we'll have to kind of look at it and play it by ear. I think with Dollarama, once we start getting a shift in people moving back to more traditional retail. But here's the thing though, too. Dollarama, I think they're still really well positioned. they have a lot of good, I don't want to say good, I was going to say good products. They don't have good products. They have, they've got cheap products, and that's good. That's what people want when they go there. So I would say dollar cost averaging, you're probably still fine with that. And then maybe take a look at where you may want to start taking some REITs or REITs. I just saw what Tanya said. I saw REITs. Where you might want to start taking a few profits if you get some really big bumps. So just something to keep in mind. King of Day says, I don't mind self-checkout, but I do prefer cashiers. Thanks again for the free membership. Oh, you're welcome. You're welcome. And keep in mind, everybody, next Sunday, free memberships. I usually give away around 10 of them on the first Sunday of every month. And here's Tanya with a QQQ buying REITs. What do you look for? Okay. So when I'm looking at REITs, the first thing I'm going to do is I'm going to look at, because not all REITs are equal, right? It depends on what the REITs are looking at. I will look for a REIT that has more residential. So, for example, if it has a lot of office, I don't see that as being one of the ones that are going to recover as fast. I think the residential will be the ones that recover fastest. So, I've been looking at, for example, RioCan. I've been looking at RioCan. I actually added RioCan to the 0 to 100K challenge. I also added Timber Creek Financial. Now, they're not technically a REIT, but they pretty much should be. They pretty much, they do the exact same thing a REIT does. So I've been looking at those two for now. There are definitely some other ones out there. Now, ones I would be a little more, I don't want to say cautious, like they're still going to rebound. So you take, for example, Slate Office REIT. Just that it's just going to take a little bit longer, because I think right now office buildings are still in trouble. I don't see them as being super profitable yet. Whereas the higher residential type REITs are going to start to see the benefits faster when it comes to rate cuts. So that's kind of the way I've been sort of setting myself up for REITs. All right. Now, the other head story, I guess I'll call it title story. I mentioned something about shrimp, and that all boils down to, let me put up the banner here for you. Red Lobster. So down in the U.S., good old Red Lobster has they've filed Chapter 11 bankruptcy in the U.S. So this is apparently, so I'll give you the reason why it happened. They lost a ton of money because of their all-you-can-eat shrimp deal. So it started as a special. And this I find funny. I find this hilarious. So you have a special, all-you-can-eat shrimp. Everybody loves it, but you're losing money on it. So what would be the logical thing to do? Let the special die. Don't bring it back. That would be the logical thing to do. But what does Red Lobster do? They decide to make it a permanent part of their menu. They turn it into a Red Lobster staple. And that was a bad move. As a result, they lost a lot of money. Because I don't know about you guys, but I know people that can quite literally go into Red Lobster, and if they have all you can eat shrimp, there's going to be shrimp hiding in the Gulf of Mexico because they're going to be afraid for their lives. I mean, people can eat a lot of shrimp. People can pile away a ton of shrimp. So yeah, this was not a good idea on their part. So in a sense, the bankruptcy that they're facing in the U.S., they kind of brought it on themselves. They shouldn't have made it into a staple. They should have just said, look, we're losing money. Let's not do it. Because the object of business is not to lose money, but they haven't kind of figured that out. So here's the thing. In their heyday, so Red Lobster at one point in time had about 700 restaurants right across Canada and the U.S. Now, in Canada, we're actually doing better. So our Red Lobster restaurants, they're not in as bad a shape financially as the ones in the U.S., but because of the bankruptcy, they have actually reached out and they have asked the courts to enforce the U.S. bankruptcy in Canada. Partially because, well, if we have the Chapter 11 bankruptcy protections, it'll give them time to assess which of our Canadian locations are profitable and which ones they may want to keep open. So if you're worried about losing Red Lobster, you may not have to lose them, but there may be some that shut down. It's hard to say. I still can't believe the all you can eat shrimp. Seriously. Yeah. So, all right. Abalash says, would you pick Ryokan? Yes, I just said I would love to pick. I love Ryokan. Northwest Health, I think Northwest Health is another one that will definitely benefit from the rate cuts. So I think they're good as well. I'm not sure what the cap rate is. I can't remember what that one is off the top of my head. Ian says Dead Lobster. There we go. King of Day says, do you have ETH spot ETF on the news? I don't want to jump the gun. Thanks. It is in our crypto corner. We do have it in the crypto corner. So we'll get to it. We'll get to it for sure. But it is there. Yeah, there's no way we could go into here without talking a tiny bit about ETH. Prairie says, RIP Red Lobster. I'll miss your all-you-can-eat shrimp. There we go. How many shrimp, Prairie? How many shrimp could you eat? Just curious. Like, don't even ask the number. Let me just say this. Do you think there's any chance after you go into a all-you-can-eat shrimp that you can actually that they can actually make money on you? Is there any way? I have a feeling no. And I don't say that. I'm not saying that you're going to eat a ton, but I don't think it takes many shrimp before you start to lose money. I think most people probably could eat more shrimp than it would take for them to start losing money. Ian says they are owned by a seafood company. The company was making a lot of money at the cost of Red Lobster. Here, it's a bit of a scandal. Okay, fair enough. Fair enough. All right, let's get to our next news story. We got another EV story and another beaver. Holy cow. It's like, can't just cut it with the beavers already. But I like it. It's a Mountie beaver, and he's trying to plug in his police car. So what can I say? So the RCMP, their goal is to, switch their fleet of cars to electric. Problem is, it's a much bigger undertaking than you might think. So first of all, they have to figure out which car they want. So they have been field testing 2 Teslas because right now they're looking to basically replace about 12,000 vehicles with these zero emission options by 2035. Now, here's the problem. Not only do they have to figure out which vehicle. So I did mention they were testing a Tesla. They're also looking at the Ford F-150 and some Chevrolet Blazers. So part of the issues, though, is that whatever car they pick, it has to be able to be built into a police car. So that means there's going to be extra power requirements for sirens. You got to have a siren if you're a police car. The other issue that they have is that, some places that the RCMP are at are very remote. So there could be some charging issues right now because there's not a lot of chargers in some of the communities that they cover. So that's kind of an interesting thing to keep in mind. Now, there have been, within Canada, there have been local police forces. So I think Oak Bay, British Columbia, and Bridgewater, Nova Scotia, and Repentigny, Quebec. They've already begun introducing EV squad cars. So, there is a movement towards it. And, I think it's going to take, once again, I think it'll take the RCMP a little bit longer than 2035 because I think they have a fair amount of stuff to overcome. All right, back to the Red Lobster. Wayne says, earlier this week, a court granted Red Lobster Canada a stay in proceedings. That they did, yes, which prevents creditors from taking action against it. This is according to the Canadian press. Yes. So they have done it so that way there, anybody who's trying to take action against Red Lobster, it gives them that protection. So that is definitely a move in the right direction. You don't want some of the creditors in the States coming after Red Lobster Canada, and that does give them protection. Prairie says, my daughter and I always joke that we could put Red Lobster out of business. Now here we are. Did you guys just do an American tour, Prairie? I'm just wondering, maybe you've done it. Maybe you've done it. Ian says, I'm going to have to watch the replay. What's the REIT that's not a REIT but acts like one? What's the symbol? Is it an eligible dividend? Okay, so it is TF. So Timber Creek Financial. Now, now normally with a REIT, the dividends are 100% taxable, and I believe it's the same thing with TF. Like I said, it does behave very much like a REIT, so it wouldn't be considered an eligible dividend. It would be considered 100% taxable income. So if you have it, of course, outside of a TFSA or an RRSP. So that's a big thing with REITs as well. You always, because they're not paying taxes. That's what the whole idea. That's why they have bigger dividends. They basically take all of the profits after they've paid all of their expenses, and they give it all to you, all of it, because they're not paying any tax on it. But they're passing that tax on to you, which is, it's fine, especially if you put it in a in a registered account. Then nobody's paying the taxes that way, so it works out. Ian says, if the police car had a quick disconnect so they could be charging and then drive away without unhooking would be that's not a bad idea. Not a bad idea either. So having a quick disconnect. And you'd kind of want to have those cars charged because you don't know how long a chase is going to go. You could be on the news chasing a white truck somewhere for a long time. You just don't know. Prairie says, that said, not as much as the fellow talked about in the news who had 30 orders of shrimp in a single sitting. 30, holy banana bread. That's a lot of shrimp. Most we would order is 4 or 5. Yeah, 30. Well, imagine, there's competitive eaters out there that could probably put away even more than 30 orders, but that's a lot of shrimp. That is a lot of shrimp. At that point, it's like, can you slip a little chloroform on his napkin? Maybe if he passes out, we can just carry him out and put him out there by the bench. 30 orders. Wow. Amvas says, I found FCUV ETF through Blossom. It has crypto and outperformed VFV, which I'm considering as my core. A few went 50-50, VFV, VCUV. Appreciate your thoughts and thanks so much again. Oh, excuse me. Gotta have a drink here. Gotta love the Starbucks. So yeah, there are. I think crypto exposure is definitely good, and we're going to talk a little bit about crypto. I've been very bullish overall this year on crypto, and there are some. I don't know FCUV personally. I have to take a look at it. Remind me again, and we'll pull it up after we're finished the news stuff, because I would like to see what that is. It's got me a little bit interested. But there are as well spot ETFs. I know I saw the other day there was a spot ETF that did both Bitcoin and Ethereum. And I was thinking that's not bad. But yeah, we're going to talk a little bit about crypto pretty darn soon. I think I've only got one news story before we go to the crypto. Let's jump into that story. All right. Bonjour, Boeing. Oh, Boeing. So this is not a disaster story. We're not going to talk about doors. We're not going to talk about the way they fly. Even though, funny story, I was trying to make this, and I wanted an airplane up above a high-tech building to sort of symbolize what we're going to talk about. And quite literally, the first time I asked the AI, I said, I want an airplane just up in the sky, out of the way. No word of a lie. AI came back and gave me a plane about to crash into that building. I was like, nope, can't use that. Nope. So, yikes. I was like, whoa, AI, you got dark really fast. But anyway, we got that fixed. So, what's going on? Boeing is going to be setting up shop in Montreal. So they have chipped in $240 million towards a new aerospace innovation zone. It's just outside of Montreal, to be more precise. So this move is going to expand Boeing's significant presence in Canada. And we do have a huge Boeing presence, not president, huge Boeing presence in Canada. right now they already work with over 560 different suppliers here. So, they are a major part of our economy. So, we got to cut them some slack, cut Boeing some slack. Now, last November, Canada actually did cut a deal with the U.S. to supply the Royal Canadian Air Force with 16 Boeing planes, actually. The Poseidons, that's what they're called. These are military planes. And as part of that $5.9 billion deal, Boeing did agree to invest in more Canadian enterprises. And, well, this is it. So they're actually setting up shop in this building as well. They will be the prime tenant. Now, right now, Canada is the second highest contributor to Boeing's supply chain. Pretty much the only country that provides more for Boeing than us is Japan. So that's kind of interesting. The company has, they say they're planning to have a continued investment in Canada. And they said they're not just looking at our aerospace industry. They're actually looking at a lot of other things as well. But Boeing has been they've been a good presence in Canada for sure. Now, over the next decade, they are expected to contribute about $350 million annually to Canada's GDP. And that also translates into the form of 3,000 jobs. So that's not too shabby, at all. So good old Boeing. All right. Prairie says Boeing has a major plant here in Winnipeg. Nice. So there we go. Winnipeg and Quebec. I'm sure there's probably one here somewhere in Ottawa. I don't know for sure, but I wouldn't be surprised. King of Day, going back to the police vehicle, possibilities of police EV vehicles being hacked. Oh, yeah, that would be fun. So just watch Leave the World Behind. I watched that. That was a interesting movie, King of Day, an interesting movie. But yeah, you have to worry. I mean, here's the thing, though. Even gas vehicles, a lot of the sensors are run by computers. So you could hack. Technically, you could hack either or. So I don't think EV would make it more hackable. I think as long as the thing has been made since computers have been around, so as long as it's been made since probably about maybe 2000 to 2010, it's probably hackable. I mean, maybe not easily. Like I think hacking cars, they make it looks a lot easier on TV than in the real world. So, but let's hope that doesn't happen. Let's hope that doesn't happen. Yeah, exactly. Amen to that. Amen to it not happening. All right. Crypto corner. Let's get that out of the way. We'll bring up our little crypto guy. Right. So, Ethereum. So on Thursday, the SEC, so the Security and Exchange Commission down in the US, they signed off on a proposal by venues run by CBOE, Global Markets, NASDAQ, and the New York Stock Exchange to list products tied to, Ethereum. So this is huge. This is them basically giving the go-ahead for Ethereum ETFs. So spot Ethereum ETFs are going to be coming. Now, they're not going to be coming super fast, but they're going to be coming very fast. So the fund managers, they still need a separate approval from the agency before they can launch products. The timeline on that is unclear, but this is the easy part. All the hard stuff is now out of the way. So it will be very, very fast. And they should get the green light really, really fast. So everybody's excited. Interestingly enough, the Ethereum's price hasn't quite gone crazy yet. It has. I mean, it's been moving up. I think it's already been. I think the spot ETF is almost priced in this case. But we are looking at a spot Ethereum ETF. That's just absolutely cool. I can't wait. All right, couple small little housekeeping things, and then we'll get rid of the whole side thing and go back to regular thing. Then I can actually bring stuff up if you guys want to ask some specific questions. So this week coming up in Canada on Tuesday, the 28th, we do have our PPI. So that is that's the producer side. So basically our wholesale inflation, and let us know what that is doing. We also have a month-over-month GDP result coming out as well at the end of the week. So on Friday, down in the US, the only thing they have is really on Friday as well. The PCE is coming out. So those are your personal consumer expenditures. Now the Fed down in the US, they do like to look at those as an indication of inflation. So that'll be interesting. All right. Earnings. Holy cow. This is bank week. We did start with TD, and TD actually beat expectations, which is fantastic. Mind you, all of this stuff that's happening with the laundering, the money laundering, it really happened late enough in the quarter to not really impact their results. So people who are like going, what? How could they beat expectations after all of that trouble they got into? Well, most of that trouble happened after the end of the actual quarter, to be honest. So you're going to see next quarter, if there's any impact, that's where you're really going to see that. But this week, we got Royal Bank. We got Bank of Montreal. We got Scotia Bank, CIBC, National Bank, and the smaller banks like EQB, Canadian Western Bank, Laurentian Bank. So we got a lot of banks hitting, which means we're going to be, I'll be doing my review, not this week, but next week. I'll do a review of all of those in our bank, our quarterly bank review. So that will be coming up pretty darn fast. All right. Now I can get rid of that. I can do that. Woohoo. All right. And I can also, holy banana bread. Give me a second. I thought I had already shared the screen. I might have accidentally clicked it off, but that's fine. We will bring it up. Here we go. And put me down here. All right. Here is our Discord. Perfect. So you'll see I have now got the whole schedule up here, which is fantastic. Whoops. So coming up, oh gosh. Some of you guys are going to love this video. So coming out on Tuesday, I'm doing, I normally do 5 in my list, but this time I thought I'm going to do 6. So we're going to look at the 6 leveraged cover call ETFs for maximum cash. So this is for you income investors. This one is for you guys. So that's coming out on Tuesday. It looks, actually here, I'll show you. I actually have the thumbnail already made for it. Right here. There it is. So high risk, massive dividends, already there. So kind of cool. I did that earlier before the stream actually started. We also have our members choice video coming out at, actually that's on May 31st. Whoops, that date needs to be fixed. So that comes out on Friday. But keep in mind, channel members will actually see it a day early. So one of the benefits, of course, of being a channel member is that you do get to see things a day early. So as soon as I finish, like, for example, this video here, I'll be filming it in the morning and then going right into editing. So by tomorrow afternoon, it'll be out for the channel members to watch. But for you channel members here, you have that opportunity to basically tell me what that last video is of the month. So right now in the community tab, there is a post asking for your ideas. I think I got about 4 ideas so far. So I just need one more idea. Throw it in there. I'll get a poll out then tomorrow so that we can get you guys voting on it, because I'll need to have that voting done by Wednesday, because then I'll have to start doing the research and scripting and all of that fun stuff. So that's coming up. Next week is going to be fun. So next week, we got our 0 to 100K challenge on this 4th of June. And then there's that bank review I was talking about. So we got that bank review coming up. And then the following week, we have our channel member live stream. But I have put this in. So I've had many requests to do a video on the RESP. It's here now. We're going to do it. So that's going to be a fantastic. So I'm looking forward to that. All right. Now, AmVas, you were mentioning, what was it? FCUV. Let's take a look at this right now. I'm going to pull this over here. FCUV. Let's see here. Okay. Okay. The Fidelity. All right. I've heard of this one. I just didn't realize what the ticker was. All right. So let's take a quick gander here. Oh my gosh. Look at this. This is some really nice growth. I can see why people have been talking about this on Blossom. Let's see. It's not a big distribution yield, so your dividends are not that high, but just look at that growth. That's fantastic. Let me just go in here to a couple pieces of key data. Oh, look at this. This is beautiful. Return on equity, 33.27%, 12.74% on the return on assets. This is not bad at all. I think I like it. Now, give me 1 second here. Just we'll get back to this. But yeah, it's had an incredible growth. It's at a very reasonable price. So I think this is a good one. And it sounds like you've done your due diligence. But yeah, this is nice. FCUV. So any of you who have not seen FCUV, this is nice. It's definitely worth some due diligence for sure. And this is like 3-year. Let's go to 5-year. So, it's only been around since 2020. But yeah, look at this. And keep in mind, we had a bear market and it barely blipped down during the bear market, and it's just been growing. This is a very nice. I like this one. I kind of think I wouldn't mind having it in the 0 to 100K. But yeah, it's a nice looking stock. Well, I like it. All right. Let's see here. Where the banana bread was I? Right here. All right. The firm I did work for Boeing years ago, had the opportunity to tour their plant. Now, that'd be fascinating. That would absolutely be fascinating. I'll bring my big head back up until you guys want me to look at something. Ian says, I'm looking forward to the BNS earnings report on the 28th. How does dividend ratings work? Dividend king status, do they have to raise it every year? So yes. So when we're looking at dividend aristocrats, so if you've increased your dividend for 5 years in a row, you become a dividend aristocrat. Now in Canada, we're not super hard tight on that. Like that, there's like a little kind of I even hate to bring it up, but there's a little exception in it saying that if you miss 1 year, you might be okay. But typically, a dividend aristocrat has raised their dividend for 5 years in a row consecutively. Then, if you want to become a dividend king, well, the bar's a lot higher. In fact, right now we have 2 dividend kings in Canada. So we have CU, so Canadian Utilities, and Fortis. Those are our only 2 dividend kings, because you need 50 years of consecutive dividend increases to become a king. And here's the thing. Let's say you were trugging along and at 40 years, you just had 1 bad year and you didn't raise your dividend. Well, you got to start all over again. It's going to take you an additional 50 years to get there at that point. So here's one of those things too. So when you're doing due diligence and you notice that a company has a very long streak, well, there's a certain amount of pride to being a dividend aristocrat, or especially for being a king. So a lot of times that means that company will try everything possible to not, cut their dividend, suspend their dividend, and to raise it. Now, mind you, they don't have to raise it a lot. Like quite literally, you raise it 1 penny, that counts as a raise, as long as it goes up. So it's kind of that interesting thing. So sometimes when I look at some of these companies and I'll look at the dividend streak, if you take some company and they're like, well, they've been raising their dividends successfully now for 35 years. Well, the chances, even if we're in a bear market and they're struggling a little bit with debt, well, the chances are they'll probably take on more debt just to meet their dividends, because they don't want to go back to back to 1, especially if they're thinking, you know what, they may be sitting there at 35 thinking, in 15 years, we'll be a dividend king. We can do it. Now, here's the thing. Now, if I was looking at that same company and they only had like let's say a 5 or 6 year streak on the line, then there's a higher probability that they might be more willing to sort of, not meet their dividend obligations of being a dividend king or dividend aristocrat in that point, and fall. But when they have longer streaks on the line and they're working towards that, I do take that into consideration, because I'm pretty sure, like, it's, I look at the list, and when I see companies that do fall off of the dividend aristocrat list, most cases they're companies that weren't that far up. It's very rare to see somebody, up in the top third fall off, because they will do everything they can. Not to say it will never happen, but they'll do everything they can before it happens, for sure. Terry says, Fed's buying into Boeing and Intel in Quebec as of late. Total political point scoring as opposed to sound fiscal investing down. It's one of those situations, like, as we move into next year, typically means the government's going to start dishing out money a bit more, which is not great for inflation, of course. But here's what I'm hoping. And with this government, I probably shouldn't be hoping anything, but I will hope anyway. My hope is that they kind of see the writing on the wall, that they realize there's the chances of them, because everything they've tried so far has failed. They thought the latest budget, they thought it would give them a bump. It didn't. Now they're kind of trying to reach out to younger voters, so millennials, maybe even a few of the Zoomer crew. And so far, that's not really paying any dividends. So if they come to accept that they're not going to get back into power, then they hopefully will not start throwing around money like it's going out of style, and that they won't just start throwing money at everything to buy votes, because it's not going to matter. That's what I'm hoping. I'm hoping we don't get that traditional run up to the election where they give away as much money as they can in hopes of pulling it through, because they're not going to. They're going to fail. At this point right now, it's like, I can't see a way forward for them with this election at all. Like, some elections are close. Some elections you're looking at it and campaigning makes a big difference. But this election in 2025, I don't see a path forward for them. Maybe a massive scandal might hit the Conservatives by then, and they'll get some kind of some kind of traction. But right now, it's not there. It's not there. And it seems like everything they do. Now, what I think should happen, and this is personal opinion, I think Trudeau should step down. I think, get somebody new in there, and don't wait till just before the election. I mean, if you want to distance the party a little bit from Trudeau, I would do it this year before the end of the year. I would say go into 2025. Go into 2025 with a new leader, try to distance yourself. You're probably still not going to win the election. You probably still don't even have a chance. But you at least start the process of rebuilding the party and trying to get people amenable. But yeah. Anyway, the problem is right now is when you look at the Trudeau's attitude towards the whole thing, I have a feeling he'll just keep holding on and holding on. But if the party was smart, he would resign by the end of the year, and they start with somebody new. Whether it be, and even now, I mean, I know a lot of people were saying that he was that the party was kind of getting Chrystia Freeland, sort of grooming her for as his replacement. I think the problem is with her is that she is just so entwined into into his policies, to the point that I think they need somebody who we don't know their name. Somebody on the party who has a lot of experience, but somebody whose name we don't instantly recognize. That's what I would do if I was, in charge of the Liberal Party. John says, way late, but happy Sunday. Good to see you, John. Always glad to see John. Ambass says, thanks for going over FCUV. I just went over info available, much going over my head. Do you have or will you do a video on how to do your due diligence? Thanks. That's not a bad idea. Not a bad idea. So, and the funny thing is, I guess when you watch a deep dive, so I kind of break it down where I hit to the surface data first. It gives you, well, hey, give me a second here. Let me pull this up and let me show you. Let's go here. File, new from template. We're going to go with deep dive. All right. Let me pull this over. So this here is the template that I use when I start to write a script. All right. So here we start. This is just the intro stuff. So there's your fasten your seatbelts, folks. This is going to be a good one. It's all there. And then the part in the middle with join today's conversation. And then this is the key data that I'm looking for here. So there's a surface data, cash flow data, returns data, debt data, and then just the closing out information. But I quite literally, I will start with my surface data. So I'm going to go right with the very basics. So I will take a look at the stock and I'll be like, okay, how much, what's the stock worth? What's their market cap? Because that's kind of important, understanding how big, like if it's a small market cap, you know, I will know right away that their moat is a lot smaller. So they won't have as much money to weather bad market conditions, for example. Then I want to know their beta. So the beta, that there is a number that will tell you how volatile they are. So the market average has a beta of 1. So if their beta is 2, that means they're twice as volatile as the market, meaning that they will move up and down a lot more. So maybe, for example, when you're a swing trader, so let's say if you were trading and you were doing short-term trades on them, you may want a high beta because you know it's going to be moving a lot more so that you can be picking your buy and sell points. But that's something you shouldn't worry about. Earnings per share just tells you how much money is, you know, it's kind of your first little cash information to let you kind of know how much money they're generating per share that they have. Then your price to earnings ratio. This, of course, is a number that's really, it's a good number to basically look at, compare it to other companies in the same sector to sort of give you a general idea on how they're valued. Are they overvalued, undervalued? How do they compare to others? And the same idea with the price to book ratio. Return on equity. That's how much you're getting for the amount of equity that they have. It's basically a ratio. A higher return on equity tends to signify a very healthy company. And the same idea with return on assets, but this in time here, it's not so much about equity, it's about their assets that they hold, and it's a ratio as well based on that. So with that, it gives you just a general overflow on, you know, whether you want to even look any deeper. Like if you've got some terrible numbers in here, like for example, you have negative price to earnings and you got negative return on equity, you may not want to go any further. You may be saying, okay, this is not the stock for me. Next thing you know, you take a look at their cash flow. You look and find out what kind of money they got coming in, how much are they earning? You know, are those earnings projected to go up? You can, you know, there are places you can go to look for information like that. Their profit margin, knowing how much free cash flow, so how much cash, liquid cash they got moving around the company. And then this here, just part here, most people don't do this. This is just kind of going through with a discounted cash flow model and figuring out, you know, where their price should be, where the fair value is, and putting that into the whole thing. And then, of course, this is important, going into returns, like knowing what your dividend is. If you're looking for a higher dividend stock, well, of course, you want a higher yield. If the dividends are really important to you, you may want to have a dividend that's increasing. So this 5-year average dividend increase. So you take like a dividend aristocrat, which we were talking about earlier, they will definitely have a positive number in here for sure. And then knowing what your returns are. So knowing what the return is and then adding the dividends, what your total return is, it gives you a general idea because then you can look at benchmarks. So for example, one benchmark may be the S&P 500. Maybe your goal is to do better than the S&P 500. So if you're looking at stocks that are doing better than the S&P 500, that might be a good idea. And then I go into debt. I'll look at the debt. I want to know how much debt they have, how much equity they have, and then the ratio of their debt to equity. Because the problem is a large number of debt may not be significant if they have a really large number of equity. So it's always all about the ratio. And then cash and cash equivalents, it gives me more idea of more cash that they're sitting on. Then they're just a short term. It gives me an idea of where they're at right now with their debt. So between the assets and liabilities, so that's their short term. And then their long term lets me know where they're positioned to be in the future. So it kind of like, it's almost like looking at a crystal ball to give me a general idea of where they're going to be. But when I pull all of this information together as a whole, it's like building a jigsaw puzzle. And it really, it really can give me a good idea of where that company is and where they're more likely to be going. Is it perfect? No, it's not perfect, because sometimes things can happen that even good fundamental companies can sometimes just absolutely, I was going to say poop the bed. We'll say that. Sometimes it can happen. But if you've got good fundamentals, then you have a higher probability that you're going to do okay. So just something to keep in mind. And that's kind of the way I approach one of these stocks. Now, in addition to that, I'm going to look at news stuff. I'm going to actually look at their, I will like to look at, for example, their financials. So if they had a recent quarterly report, I'll look at that and I'll take a look, because sometimes a quarterly report will tell you things that are not in the data. Like, for example, it might be like, we spend a lot of money building a mine that's coming online next month. So I will know, okay, they're going to have increased production next month, and that's where some of that money went. So it might help me make sense of what happened in the data. And also, when you're looking at the news, if there's absolutely something horrific that happened with a company, it's going to be in the news. So for example, with TD, all of the money laundering stuff in the news, I'm like, okay. Now, TD is big enough that that's not going to hurt them. But if TD was a smaller bank, let's say a Canadian Western Bank, let's say if it happened to them, it would have a bigger impact on them. So once again, that's where I'm pulling the market cap and some of that data in to the actual news and sort of giving me a general idea on, okay, how much of an impact will this event have? So it sort of puts it all into perspective that way. All right, let's bring back big head me there. We went off on a tangent, but that's okay. I think I feel like a good little cup of coffee there after our tangent. Okay. Oh, and before I go any further, I will mention once again, I think I have it still here. Do I? Yep. All right. I'm just dropping the link here for my NVIDIA video that I did in February. So to earn a bonus market close this week on Friday, I'm looking to get 50 views on this video, just kind of a little experiment. And it gives me something that, or actually it gives the guys, those of you who are watching the replay, something you can do to earn that thing. So I've got the number written down. As long as we get it there by Wednesday, we'll get that extra thing. I don't think we'll have any problem. But as I said earlier, if you're sitting there saying, "Oh, I'll make sure you have it. I'm going to watch 50 times in a row." Don't do it. Watch once, no more. Don't worry. There's a lot of folks who watch this. I'm sure we'll probably get the 50 without any real issues. But anyway, it's just something I thought we would try to see what happens. All right. Ian says, if they bring in a bunch of social programs that are unaffordable, then the conservatives will have to cut them. That would make the conservatives unpopular and give them a chance in the future. There's a possibility. I mean, problem is they've already kind of done that. You've got dental care coming in. So there's no way I could see Polyev cutting dental care. And that's fine. I think we need it. I think as a country, we definitely need it. I mean, it does tie. I don't think it's managed correctly. I'd like to see it, if anything, Polyev, I'd like to see him work with the provinces and sort of see, all right, can we sort of tie this into transfer payments and maybe have it attached to, to the provincial health care, perhaps, because you've already got everything in place to do it. The way it's working right now, I don't think is working. Then there's also the pharmacare, and that's still kind of a little bit iffy on how that's going. So I don't think outside of that, he's going to bring into anything else. I think that's enough. And that's already a big burden there. But with the pharmacare, once again, I mean, if we have free healthcare and you have a Canadian who has diabetes and, the medication to keep them alive is so expensive. I mean, and they can't even afford it. That I can understand. You know what? I can understand why we we could use those. What I would like to see is probably have to look at things that, look at ways that we can cut, to pay for stuff like that. Look for ways that we can cut in places that aren't going to, impact something like that. There's a lot of waste when it comes to the government. So trim the waste, and I think we'll be fine if he does that. Prairie says, I don't feel Justin will step down. He's willing to run the party into the ground and leave a mess for the PCs to clean up. I don't think you're that far from the truth. But I just don't know. I think he's still, I think somehow he still thinks he's going to find a way to make that, to make a comeback. But I don't know. I'm hoping, it might be the situation where the party just has to stand up to him and say, look, Justin, let's have a talk. Let's have an intervention. So that's what we need, an intervention for the PM. King of Day, running to the store before closing at 6. Thank you, Candace, for another wonderful stream. Have an amazing week, everyone. See you all next Sunday. Yeah, absolutely. We'll be back here again next Sunday. Ian says, if you are looking for a video topic, I would like to know how to spot dividend traps. There's a lot of dividend traps out there, but keep in mind too, a dividend trap to one person may be an opportunity to somebody else. And that really what that comes down to is that, let me sort of put it this way. If, for example, you have a income portfolio and you don't care what happens to the value of that stock, as long as the dividends keep flowing. In some cases, other people might look at some of the stocks that you have in that portfolio and say, those are dividend traps. Because look at that, you're losing value there. Look at the return on capital in that. So you can argue that. So, but yeah, I will definitely look at digging deeper into that topic. I think it's a good topic. Why Video says, good idea. Value traps are interesting too. Sometimes it's similar stocks. It can be. Terry says, on point, Candace, as per usual. Thank you for that opinion. Amvas, for your deep dive due diligence data, where do you get the majority of it? Financial balance sheets. Thanks so much again. Loving Starbucks too. Awesome. Everybody loves the Starbucks. Okay, I'll use a few different sites. So I will get some data from TMX. So let me just pull this up here for you. All right, there we go. So this here is this is TMX. So TMX, they own the Toronto Stock Exchange. So I will get some of the data here. So let's say, for example, I'm trying to think of a company who, oh dear. It's like, I can't think of a company at all. Seriously. All right, let's, oh God. Yeah. Pamina Pipelines. We did them recently. So PPL. All right. My head was just blank for a second. So PPL, here we go. So I'll pull them up here. So I'm going to use this for some data. Like I will use this, for example, when I'm pulling my 3-year. So I hold from right here. I can see 3 years ago, they opened at 38.50. That'll be a data point for me. I've got the 49.88. So there's a calculation right there to get their return. So I will use this here for some of this data, because I'll do a 3-year, I'll do the 1 year, and I'll just scroll along here to January 2nd, which is the beginning opening trading day of this year, and I have that piece of data too. So that gives me a lot of data right there. Now, I can also on here come into my key data, and from here, I can get things like the return on equity right in here. Whoops. I can also get my return on assets. I will also, in addition to this, I'm going to drag this right to the end. I will also bring up Yahoo Finance as well. And in here, I will bring up ppl.to. All right, so within here, I have more data. So one of the things that's interesting in here is, here's my normal summary. So I'll get, it's got data in here, like, for example, the beta, your PE ratio. It's got a lot of the basics as well. You can find those numbers as well in TMX, but I'll come in here to statistics, and a couple of things I'll do in here. For one, I can get their payout ratio, which is in here, which is great. The second thing I'll do as well is I'll look at their return on equity and the return on assets and make sure these numbers jive with what TMX is saying. Because sometimes, every so often, not a lot, but every odd time I'll find for some reason the data is skewing really badly. And then I'll be like, okay, what's going on? Now in here as well, I also have financials. So this will give me a breakdown of their income statement. I can also look at their cash flow. For example, if I want to look at cash flow, I will get this as well. Now, in addition to this, you're kind of getting a whole bunch here. You may have to sort of just pause it and go back and look at things later. I also like a site called Simply, simplywall.st. So when I come in here, now this one is, all right. Okay, perfect. So this one here, and anybody who watched that or plays it back can see my personal email address because it showed up. This one here will allow me to do a certain number of searches. Now, if you have the free version, you can only do 3 searches a month. But here's the thing. If you do, right here, we're on Pembina. So this part here, you can see for free. So this will give you an idea of where they're trading. So right now, these guys are trading at 36.8% below their estimated value. So that's basically the discounted cash flow model. Their earnings are forecast to grow 4.32%, pays a reliable dividend. You can also see other risk factors. So for example, they have a high level of debt. Shareholders have been diluted. And there's been some significant inside selling. So I can get all of that in here. Now, once if I go further, and I'll try to go further. It may cost me one of my things. Yeah, it does. All right, we'll go to a view full report. So here I can bring it in. So here's the discounted cash flow model. They do all the math for me, which is fantastic. But if I want to check out the individual data, I can actually pull up a lot of that individual data and see what they used to make sure that it jives. So all the data is there. I'll usually use these guys as well for my debt. So if I go down to their financial health. So for example, with this one here, I've got your short term of 3.05 billion, 2.95 billion in liabilities. So that's not bad. Same thing with their long term. So 30.18 billion to 14.35 billion. So it's all right there. And as well, I know they got a debt to equity ratio of 70.3%. If I come down here, I can actually pull this up and this will give me everything I want. So right here, I've got their debt is 11.12 billion. Equity is 15.92 billion. They've got cash and cash equivalents of 1.70 billion. So I can pull the data from a whole bunch of different things, which is fantastic. So that's kind of what I do. Now, the other thing I will do as well is, and I mentioned this here too. Let's just see here. I will go to Google and I will go to, and I will pull them up in Google because where I want to go is, and you think it would show up for me really easily. All right, here we go over here, subsidiaries. Here we are. Here's the link. So I will also go right to the source. I will go to their website. And by going to their website, I can go into the investor section. And that's where they're going to have all of their documents and filings. So when I click on that, I can look at each of these reports. So here's their Q1 report. I can click on it and I can actually bring it up and I can go through and I can read, some of the stuff about them. So it gives me a bit of their background. It gives me a bit of what they're strategizing. And then they will break it. I'm not going to go through all of it, but they'll break everything down for me. And that there is fantastic. So I will use all of those, pull it all together, and that will give me what I need for the deep dive. Now, the thing is, it's a lot. And I don't recommend that you learn it all overnight. In fact, one of the things I did before I started doing fundamental analysis is I actually read a book. The book I read, I think it was called Fundamental Analysis for Dummies. Because, don't be alarmed by the For Dummies and the Dummies line of books. They're just really, really good. And I think they gave a very good overbrush of fundamental analysis. So something like that, if you want to learn, that's another option as well. But the other thing too is just knowing where I'm going and paying attention to, when you go into my deep dives, just sort of watch as the data starts coming in and be like, okay, that's kind of cool. I think I understand. And then you get the comments. Like if something happens in a deep dive that you don't understand, hit the comments and say, Candace, explain this for me, please. And I will. I absolutely will. I answer every single comment. So I will explain it. No problem. All right. Mary says, thank you so much. I learned so much as usual. John says, just looking at this FCUV, I assume you talked about it earlier in the stream. It looks interesting first glance. It really does. I do like it. TOU, Torlamine could have been somebody as well that we could have done. But I don't know. We did PPL. That's fine. I'm okay with that. And Namba says, wow, Candace, you cover so many sticks and your due diligence is already time consuming, yet you have time for live chats. So thanks for all your sacrifices and time to help us. Oh, you're welcome. No, I mean, this is the thing. I do love the live streams. And it's one of these things like, if you guys are asking the questions, I'm going to be throwing the answers. So that's always fun. Now, we are coming up to the end. We've been doing this for, holy banana bread, 2 hours and 6 minutes. So if you got your last minute questions, drop them in. I will answer them. While I wait for you guys to do that, I'm going to have, I'm almost out of coffee. I'm going to have another sip of coffee. Oh, so good. So good. But yeah, so I mean, here's the funny thing. So just to give you an idea of the time I spend, since you kind of mentioned it. So I have 1 day off a week. That's Saturday. Saturday, I do nothing. Quite literally nothing. I might answer the occasional question on Saturday, but I really do nothing. So yeah, because I have 2 to 3 live streams, sometimes even 4 if I'm doing like a channel member live stream that week, and then there's a bonus one. Now the lucky thing is for the market closes, I don't have a lot of prep work. But now for this one, I got prep work. I gotta find 8 news stories. I gotta find a crypto story. I gotta make all the images. So it adds up quite a bit. Now normally it takes so to make a video. So one of the videos, it takes. So what I normally will do is script it the day before. So I will script. So for example, the video that's coming out on Tuesday, I actually scripted that today. So that was my first half of today, was scripting that video. It is now fully scripted. So it's ready for me first thing in the morning after I do some exercise. I'll come upstairs after, breakfast too. I'll have breakfast, exercise. I'll come upstairs. I will film it, and then I will edit it. And my goal is usually to have it done by about 2 o'clock. Then I will actually upload it, let the channel members have their chance to watch it. And then 2 o'clock the next day, so on Tuesday, then it goes live for everybody else. But yeah, so I do that twice a week because I have 2 videos every week. So yeah, no, I keep myself busy. And plus I'm answering all the questions. And plus I try to pay attention as well to what's going on in the world of tech because, and I also trade as well at the same time. So yeah, it's a pretty busy week, but it's worth it. You guys all rock, and it is fun being here. Thank you, Prairie. All right. Well, it doesn't look like you guys have any more questions, so I will let you guys get to like supper and all of that fun stuff. Amvast comes in. Truly appreciate and extremely grateful for you. Please let us know how we can help you. I'll watch your NVDA video. Yeah, absolutely. So watch the NVDA video. There's tons of ways to support the channel. Obviously, watching the videos is number one, in my opinion. Watching the videos, those little things like super chats and all of that, memberships, that all helps at certain, it's going to take a while before I get to a point where I'm operating the channel in the green. So right now, it's growing. It takes time. So there's all of those fun things. But like I said, number one, the most important thing is just, the more you interact with the channel, the better. That's how I look at it. Because, if I'm making content, knowing what you guys want makes it a lot easier for me instead of guessing. Occasionally I will make some content that I know one or two of you want, but I know the rest of you really don't. But I'm still going to do it. I'm still going to do it. I do have a couple. I have one video, like the first time this is a funny story. The first time I ever gave I started Patreon initially before I was monetized and before I had channel members. And I had a Patreon choice, and I let the Patreons choose a video. And they wanted a video on the metaverse. And to date, that's a video that's been on the channel for 3 years. It has a total of 78 views. And that's fine. I own it. I haven't removed it. I'm leaving it there. I own it. I'm like, yeah, that's what they wanted. That's what they got. But yeah, now mind you, if the same thing happened today, like if the channel members got me to do some kind of crazy video at the end of the month, today a bad video would be like, well, for me, any video that performs less than 900, I look at it and I'm like, okay, what could I have done better? If it does more than 900, but that number always keeps going up because, it's based on the average. So that's a channel average right now over the entire life of the channel. So that includes a lot of low numbers too, like the 78. I had a Christmas video, first Christmas, that did terrible, but I don't know. I mean, it was just weird. That was the video that made me buy an expensive camera because I was just like, holy cow, how can it be so friggin' unfocused? So just a little thing. Anyway, I got off on a tangent. All right. I will actually bid you guys farewell now. I'm getting a little bit hungry. It's like 6 o'clock. Well, 6:11 here. And the kitten's starting to wake up. So I think she wants some attention too. Anyway, until next time, everybody, take care. We'll see you later. Bye.